Think Realty Nation, it's Abhi Golhar, your host of the Think Realty podcast. Welcome to the podcast, first of all. I have an awesome lineup for you today. We have Jeff Tennyson from Lima One. He's a lender, and we're talking about lending today for a few minutes, so that should be an awesome conversation. We also have a quick market update for you about the fact that annual home price gains continue to slow. So is that a good thing? Is that a bad thing? Quite frankly, I'm okay with it. Aren't you? All right. We're also talking about some of the staging tips for a photo shoot that you want to get right. And then, of course, most importantly, my favorite topic, making digital home closing processes like prevalent everywhere. So let's have that conversation. Really excited for the podcast today. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. And here's your market update. Annual home price gains continue to slow. According to the latest Case-Shiller Index, home prices climbed 4% year over year in February. Quote, the pace of increases for home prices continue to slow, says David Blitzer, Managing Director and Chairman of the Index Committee at the S&P Dow Jones Indices, said in a statement, quote, again, homes began their climb in 2012 and accelerated until late 2013 when their annual increases reached double digits. These regional patterns are shifting, though, and the three California cities of Los Angeles, San Francisco, and San Diego have the three slowest price increases over the last year. So the challenge that I have with some of this data is that there are a lot of big major media outlets using this to say that the housing market's going into a decline. It's not. It's a market. It's supposed to go up and down and up and down and up. That's exactly what's supposed to happen. So stop using this as an excuse to say that we're seeing a recession and we're going to be in some type of recessionary environment in 2019. I don't think it's going to happen. I don't see any predatory lending. I don't see any stupid people getting a whole lot of loans right now. So until that happens, and you have a lot of folks ringing the affordability bell, and then you have a lot of people saying, hey, you can just get loans at 0% down, then I'll have cause for concern. But until then, I don't. So you know what? Lay off the stupid. All right, we're going to have a great conversation with Jeff Tennyson from Lima One. That's going to be a great conversation starting right now. And Jeff, welcome to the Think Realty podcast. How are you doing?
I'm doing great, Abhi. Thanks for having me on the show.
You got it. Now, you're with Lima One, and I've been following Lima One from way back in the early days, and y'all have done a really good job of providing loans and capital for real estate investors across the country now. I mean, you've really expanded your service offerings and locations, et cetera, but you're better at telling that background than I am. So maybe give us a little intro on who you are and what you do.
Well, thank you. We were started in 2012 by our founder, John Warren, who, after spending 4 tours of duty in Ramadi, Iraq, as a Marine, he and his partner, John Thompson, who's now our Chief Operating Officer, really wanted to do something after their tours of duty in the Marines other than just figure out, an hourly job to go at. So they really wanted to be in the real estate business. And the reason our company's named Lima One Capital is Lima One was their platoon, the Lima platoon, and they were the #1 platoon in Lima. And so Lima One Capital became the name, patterned after the John Warren and John Thompson's platoon in Ramadi, Iraq. Today, Lima One, we have over 150 employees in Greenville, South Carolina, our headquarters, and we lend to real estate investors across the entire United States, 43 states. That includes fix and flip. That includes a rental program for both one loan, one house, and a rental program for a portfolio of homes, 5 and more. And then we have a small multifamily product for bridge financing that is also being well received by our borrowers across the country.
So when it comes to new investors, and I'm sure you get this a lot, there are a lot of investors now that are just getting into the game that are thinking, well, geez, this real estate investing thing, it sounds pretty prosperous. It seems pretty profitable. What are some words of advice that you have for new real estate investors to grow and build a relationship with a lender like Lima One?
Well, first of all, we would encourage them to not believe everything you see on Fixer Up or on Home and Garden television. It's a much
Wait,
more.
are you telling me that's all like not true? I can make
Right?
$100,000 in like 30 minutes, right? I'm sure that's the norm here. I mean, come
Yeah.
on, man.
It's amazing the number of investors who come and assume that just
Yeah.
by buying a property you can fix it up and make, to your point, $100,000. It's a lot more involved in that, and
Yeah.
particularly today, when the investor needs to do more than just change the carpet, change the paint on the walls, and change the kitchen faucet. There's much more of a renovation process in place that does require expertise and does require more than just watching it on television and assuming you can do it. What you want in a lender is someone who will help you through the process. And so particularly on the fix and flip side, where we get most of our new investors, we help them all the way through from the renovation, because we have our own construction management team here in Greenville that will work with you to make sure we'll help you with your budget, we'll help you with your process, and then as the project moves along, give you insight and ideas by using our on-site inspectors to help understand the progress of that. And then we also, a lot of times our investors, for the first time, they've not really been lending money in this form. They've maybe borrowed money from their own personal residence, but have not really done the same thing from an investment perspective. And so as a servicer, which Lima One services all of our loans, we're also with you the entire way. So we're with you from originating the loan all the way to your last payment. And we think that helps a much better customer experience for our customer. And we think that differentiates Lima One, particularly for that new investor who is going through this for the first time.
Where do you see the market right now? There's a lot of concern over, well, geez, there's so many flippers out there. There's so much activity. There's not enough inventory. People are making dumb decisions when buying. Therefore, we must be headed towards some type of crash. What do you think about all this noise? Is it true? Do you have a crystal ball that I don't have? Like every time I shake my crystal ball, it's like a snow globe, right? Like you have access to more data than I do. So maybe you can give me some insight. What are your overall thoughts on, say, the Greenville market where you guys are, maybe Atlanta, because I know there are a lot of loans that you all do here, and maybe some of the other primary markets. Do you still feel comfortable in these markets, or are you starting to feel a little, I don't know, maybe?
We're seeing good growth in select markets. I think we're seeing a lot of overheating in the West Coast California market. That's consistently being a difficult market to A, find a good property, B, find good subcontractors and other vendors to help you renovate and develop the project. And then, there's also still, as the price goes up in some of these markets, it becomes harder and harder to find a buyer ultimately on the fix and flip side. That's even more concentrated on the rental side, because ultimately you want to have good rental rates to control that. What we're seeing is a couple of things in what we call second and third tier markets, places like Chattanooga, Tennessee, places like Kansas City, Missouri, Wichita, Kansas, the Midwest, still the Southeast, places outside of Florida, California, and even Texas to some regard. Those markets are doing really well. Cap rates are still high. They're still very effective opportunities to buy, and they haven't been overrun with more. And I think part of this was the larger rental, institutional rental buyers, Invitation Homes, the other people kind of made those markets much overheated. California's always had some overheating to it, but we're seeing the second and third tier markets to be a very effective real estate market for fix and flip and rentals. And then on the other side, we're seeing really good traction in the multifamily space. What we do in our multifamily loans is we find B and C small multifamily properties and kind of B and C that typically Freddie and Fannie won't refinance or finance in their small balance lending programs. And we will help the borrower renovate those, get them leased up. And those are really becoming really good investor products for people to take advantage of when the housing market doesn't quite have the inventory to get a good buy, but you want to use your expertise in real estate investing in some other alternative assets.
So you mentioned the institutional space and the institutional buyers like Invitation Homes. I think now they have what, like 83,000 units under management. It's nuts,
Yeah.
right? And so I was looking at Jacksonville, Florida, to buy single family rentals in it, but then you know what happened to Jacksonville? Like all these funds moved into Jacksonville and ended up purchasing. So I agree with you on that. And so that's why now as say your individual real estate investor, I need to look at these secondary and tertiary markets. My market update for today, in this show, I talked about these home prices that are climbing 4% year over year in February, and that's according to Case-Shiller. What's interesting, though, Jeff, David Blitzer said that homes began their climb in 2012 and accelerated until late 2013 when annual increases reached double digits. And now, I mean, you've got regionally Las Vegas, Phoenix, Tampa reporting in the biggest increases in these 20 cities that are tracked by Case-Shiller. Las Vegas prices climbed by roughly 10%, almost 10%. That's 9.7% year over year. Phoenix prices were up 6.7%. Tampa rose 5.4%. Do you feel like some of these markets, I mean, Las Vegas, Phoenix, Tampa, they're still primary markets. Do you still find that there would be opportunity there, or do you think that my focus as an investor still should be in those secondary, tertiary markets like a Greenville? I love Greenville, by the way. That's an awesome market.
Greenville,
yeah,
it's a great spot. It's a terrific downtown and great restaurants, and it's a great quality of life here. So
yeah.
you need to hop up 85 and come see us.
I will. I will absolutely. We'll have to make that happen.
Yeah, listen. I think the new investor can get. There's not as a good of an opportunity for a new investor to come into these markets as the experienced investor. What we're seeing in places like Atlanta, where you are, in other places, Tampa as well, those who are experienced investors know markets that, and particularly the homes in the fix and flip space, are being very effective for the infill markets. They know where the good lots are. They know they can fit a home into a particular neighborhood that the large home buyers that are looking for large developments aren't going to take the time on. And so the more experienced investors are still finding good opportunities in those upper primary markets. The newer investors, we think, will find better opportunities in second and third tier markets.
I'm with you 100%. I mean, I'm on these message boards, whether it's Facebook or LinkedIn. You've got LinkedIn groups. You have Instagram threads, and everybody's saying, well, look at Chattanooga, right? Look at Nashville. Look at, I don't know, not to give away a secret, but like Huntsville, Alabama, right? That's a very interesting market as well.
Mobile, Alabama, North Carolina, you've got kind of Hickory, North Carolina. I mean, there's all sorts of these markets that have, particularly as you look at wage earner living homes, people where you have, I mean, with the economic increase in jobs and manufacturing jobs increasing in America right now, there are these smaller areas, second and third tier markets that are needing more labor homes for people to live in, who are coming into work in those markets that haven't historically had an extensive home ownership activity or a home inventory, particularly with single family rental homes inventory being down so much. This is a great opportunity, particularly for our fix and flip investors, and then these small balance multifamily homes.
I totally agree with you. Everything that you're saying for me is validating exactly what I'm feeling in the space. Let's say I go into Alabama or a tertiary market. The acquisition price may not necessarily be the $100,000, the $115,000. So maybe we can make this a little actionable for those investors that are new, that are looking at some of these smaller markets. Can I still go to Lima One, say, to get a loan for $25,000 or $30,000? Can you tell me what some of your criteria is? And then I can accordingly then look for property that will fit that criteria to be lent against?
Yeah, so we typically want our homes, the loan sizes, and the minimum home value is $60,000, and that can be after the renovation. So there can be some opportunities in smaller balance homes. Unfortunately, there comes a point when, by the time you get, the renovation and the risk of foreclosures and other things, you have to keep the purchase price high enough that those can be profitable loans for any person to work on and underwrite with.
Yes.
But we're still seeing those. I mean, we are Lima One. We spend most of our time in these second and third tier markets. We funded over 400 units last month at Lima One Capital. And so I don't think there's anybody that has, our average loan size continues to be $180,000. And so I think we really do understand these second, third tier markets. We're not so focused on the $500, $1 million homes like the West Coast, although we're happy to do those, don't get me wrong. But we think those are important to have a good diversification across the entire country, because we do understand those borrowers. We do understand the need for those. I mean, we talk a lot at Lima One about effectively, what we're doing is we're improving the family neighborhood to live the American dream. And that's an important element of our business, because we want our borrowers to improve that neighborhood to create a better home. We want that borrower to be in a rental property so that they can improve the neighborhood and make the rental living, the rental quality of life and the rental family quality of life is equal to or better than the home ownership experience that many people experienced adversely in the downturn.
Yep.
And I think, what we're doing as a lender in this space and being focused across the country is really allowing that family neighborhood to be improved and people to truly take advantage of what's available.
For the loans that you are doing right now, what percentage of them are still like your fix and flip loans, and what percentage of them are your rental loans? Are you seeing more of a sway to either side?
Yeah, we still do about 60% of our monthly production is fix and flip.
Okay.
And that's a consistent kind of statistic, as we were doing 25 million to now doing 150 million a month.
Yeah.
So the other 50% of that, or the other 40% to 50% is split pretty evenly between our rental business and our multifamily business, depending on the month. Some month that's 50-50, some month that's 60-40 of that percentage. So we're seeing, we are seeing a higher growth of portfolio rental loans.
Yes.
Than we've seen. Part of that is, I think, a lot of the investors are realizing to really make a business out of the rental business as an investor, you need some critical mass of properties.
Yes.
And so I think that's been a big element of that. And we've really tried to improve our portfolio property loan to make that a very a more efficient, effective lending experience, because I think as that product developed, the lending experience was not very good.
Yep.
And hopefully we work to make that better.
Jeff, thanks so much, man. I appreciate the insights. It's been really valuable for me connecting with you and understanding what's kind of happening in your world and what investors as well should be taking a look at. If I want to get in touch, or if some of our viewers and listeners want to get in touch, how can they do that?
Contact us at limaone.com. You can apply online. We're happy to respond, and I think you'll be impressed with the response you get from our people and the customer service you ultimately get from originating a loan to your last payment. And so go online and do that. And we really, Abhi, appreciate what you're doing. You do a great job of getting the message of our industry and a message to these investors that's accurate, that's insightful, and thank you for helping our industry be better.
Hey, I certainly appreciate it, Jeff. Thanks so much. I think your words are too kind. I think I had to force myself to do more video. I do have a face for radio, though, so I'm doing my best to make that transition. Thanks again so much. Thank you, Realty Nation. If you got questions for Jeff and his team, super easy to get in touch with them. Go to limaone.com. There's a very big difference between smart capital and dumb capital, and seasoned lenders and non-seasoned lenders. Lima One is both smart capital and seasoned. They've been around for a while. They know exactly how to help you, and they lend all across the country. You can't beat that. Get in touch, go to limaone.com, and we will be right back. This segment is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateinvestments.com. So I love to hear when more states are now starting to legalize a digital home closing process. That means no use for stuff like this, no use for paper, which is really helpful. Fully digital closings are slowly becoming more commonplace in the housing industry. However, most states still have reservations around remote notarization. Now, I get it, not a big deal. Do you also remember when the healthcare industry had a major issue with electronic medical records instead of the actual patient records that you used to file? Right, and then you know what happened? They went fully digital. The best thing ever. And the same thing now is happening with attorneys around the country. Now the only way that you can file documents now are digitally. So listen, it's not a bad thing. It's a good thing. And quite frankly, it saves us on time. It's like, who goes to the car dealership anymore? You don't. You'll go to like Carvana or something. Anyway, just my 2 cents. Now, staging tips for your most recent photo shoot of your house. It's really important that you get this right because, quite frankly, Redfin said that the amount of time you spend taking the right pictures at the right angles, you might just get a 47% higher asking, higher asking price per square foot. I didn't even realize that. And then I realized when I used to buy and sell cars back in the day on Craigslist, I used to take really good pictures, and that almost always got a premium. So here's what you want to do to make sure that you have a good photo shoot. Number 1, clean all the mirrors, floors, and surfaces in the home. You want to ensure they're spotless, unsmudged, no smudging. Unsmudged. Number 2, you want to check that the furniture is sized correctly for the space. I'm terrible at this. That's why I hire interior designers. Okay, so you want to make sure that you get a staging company to help you out with this as well. Number 3, you want to declutter all your surfaces. So you definitely don't want to walk into a mess. It wants to be nice and clean and crisp. That's the feeling that I want to get. Number 4, you want to open all the blinds. Of course, light, duh. Number 5, you want to watch your contrasts. Really important on the color contrasting there. Too many colors and too many objects can be distracting to the naked eye. And quite frankly, if you're like me and I'm sitting in a restaurant and I have a huge menu list, I can't pick. Give me 3 or 4 things and I'm good. And last but not least, tend to the outside. Make sure that you have the right curb appeal, mow the lawn, or hire the kid next door to do it for you. Have questions, want to get in touch? Go to thinkrealty.com. And this podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the number 1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. Think Realty Nation, we covered a lot today, and I hope you learned a little bit about it, especially that photo shoot. I think that's kind of interesting. And then kind of keeping some of these trends in mind. Are we headed in a downturn? I mean, you know what I think. I'll let you be the judge. Until next time, happy investing.